Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com.
Another week of Euro crisis brought another week of U.S. equities fighting off the doom and gloom. If you listen to me, you bought Greek fear when Greece went rogue about 2 weeks ago, and you scooped stocks at S&P 1220 for a 4.5% bounce. Then maybe last week you bought Italian fear, S&P 1230, for a 2.5% gain to end the week. But the big question now is, are stocks fighting tough here, and can they create some kind of support, some kind of momentum, or are they going to get tired and are they going to be exhausted? I want to bring in two guys that I think can help us answer that, Steve Reitmeister and Kevin Matris. Steve, so the market looks tough. Can portfolio managers wait this out? Do they have the patience to endure Europe?
They've done these kind of things in the past. We get all these rounds of fear, and it pushes the market down, but then they kind of get immune to it, right? And that's what you kind of see happening. However, there's a limit to their immunity to the problem until Europe is contained. Okay, I don't even use the word solved. Until it's contained, I don't see how we can get above the 200-day moving average.
So we've got European financial leaders and an ECB system that refuses to step in and make things happen the way our Fed and Treasury would. Is that's going to scare the market?
They're not built the same. They do not have a printing press as of yet. I think they're working on getting a printing press, and they may not have the money or the resolve for the total size of the problem if an Italy or Spain really starts to falter, as it looks like they may.
Right. So since they're letting Athens and Rome burn, I think stocks are going to get tired here finding support. Kevin, what do you see?
Well, it's interesting. The problems in Europe, I think we're going to be living with these problems in Europe for years right now. So the market can either, curl up in a fetal position, and just die, or the market is going to have to try and compartmentalize everything and get past it. If you were to take a look at what the market has done over the last couple of months, they have almost completely unwound the European catastrophe trade. So we are right now where we were in August before all of the huge volatility began. So I think the market is trying to get past it, and I believe the market probably can get past it. When you look at what the economic growth rates are going to be in Europe, when you take a look at the world growth rates abroad, I think the market has the capacity of being able to put this off to the side and look towards the future.
Okay, let's look at the S&P chart.
Okay.
You got some technical levels that we should watch?
Yeah, here you go. If you were to take a look at the technical support and resistance, right immediately, upside resistance is at 1272. That is the 200-day moving average. It also comes in at a long-term trend line that goes all the way back to March. And if we can get through that 1272 area, which personally, I think there's a really good chance we can. If we can get through 1272, the measured price target would then get us to 1350. That happens to coincide with a long-term resistance line that dates all the way back to 2007. Now, if we go through the downside support is 1225. If we go through 1225, then you have the capacity of going all the way down to 1150, which was the reactionary low that we saw in August. And you have the ability of getting all the way down to 1100. I don't see it, but those are the levels.
All right, Steve. Structural problems aside, if Europe goes into recession, what does that do for our economic cycle?
Okay. There's two different things. If Europe implodes, and they go into a severe recession, then that's the main export from Europe going around the world, and we all have problems. Okay, that's the fear right now and why the market can't go higher. If they just contain this problem and there's a mild recession in Europe as they put through the austerity, we can handle that here in the United States and muddle through. Stocks very attractive. So you got to define what that recession is. Hopefully they contain it, and as Kevin says, that gives us room to move higher. If this becomes an implosion, the Lehman type event, so on and so forth, we got problems.
Okay.
What I was going to say is, if you were to take a look at the recent economic growth rate for Europe, granted it was reduced from 1.8% previously, but they are projecting the Eurozone growth rate of being 0.5%. When you take a look at what's happening now, first off, 20% of our exports go to Europe. But when you take a look at all of the efforts to be able to increase our exports to the Asian Pacific region, that's a much larger section. If we see growth continue the way it has been, we're already up 16% this year on growth rates and exports. It is believed that the growth rate in the Asian Pacific region should be able to offset the slowdown in Europe, and that portends higher prices for the market.
Okay. Speaking of Asia Pacific, they had the big APEC conference in
Right.
Honolulu.
Right.
Barack was there. And I don't know if this was selective reporting by the journalists, but every quote I saw from every CEO from Asia Pacific was just negative. They're like, if Europe's going to implode, we're going into a recession. So I don't know if there was any good news from those guys, but
what's interesting is that the stuff that I have read is everybody seems pretty excited that this push towards the increasing exports to the Asian Pacific region should be able to compensate for that. So,
And that's the story. Sorry, implode or just mild recession from austerity. They
Right.
implode, we all got problems. Okay, they contain it, right, and it's just a mild recession, which is certainly coming. Then the
or
world
the fires
economy-
start burning in Paris.
Yeah, right. Which would be part of an implosion. Okay, then the world economy can trudge forward. Okay, as long as it's not the implosion.
All right, we
And-
got to go, guys.
All right.
We got to go. Stock picks in segment 2. We'll see you then.